Holy Jeremy, Tesla stock is up big after short sellers are turning bullish on the stock. McDonald's stock is also up big after beating on earnings. And then Caterpillar got crushed today after reporting pretty good earnings. But let's talk about all of it. What's up, everybody? My name is Ale and welcome to my world of stocks. So at the time of this recording, Tesla stock jumped by over 12% today, and they are trading at over $290 per share after one of their biggest short sellers, Citron Research, did a complete 180 on the stock and turned bullish on Tesla. Now, before we get into what this analyst had to say, we just found out yesterday that Tesla is actually moving up their earnings much earlier than expected, all the way to tomorrow, which is the 24th. So we're actually going to get their earnings tomorrow. And this was a bit of a surprise because we weren't expecting Tesla to announce earnings until a couple weeks from now. So this led some people to kind of speculate and say, wait a minute, Elon Musk was promising profitability going forward, and now they're moving up their earnings a lot earlier. What if they come out and they announce pretty solid earnings? So this led to some investors kind of raising Tesla's stock a little bit. Now, as far as what Wall Street is expecting tomorrow, they're expecting a loss of about 3 cents per share and sales of about 6 billion. But that's still much better than what Tesla announced last year in the same quarter, with negative EPS of $2.92 and less than $3 billion of sales. So this would actually still be an increase in sales of over 100%. But when looking at what actually drove Tesla stock up today by a massive amount, it really has to do with this analyst from Citron Research, who has long been very bearish on Tesla, and he's actually been one of the biggest short sellers of Tesla, but now he actually turned bullish, which is pretty crazy because if you think about it, this guy is actually suing Tesla, and to my knowledge, despite turning bullish on the stock, he is still suing Tesla. Now, when looking at that lawsuit, that has to do with Elon Musk tweeting out, funding secured at $420, which a lot of people saw as fraud and a violation of securities laws. But eventually, Elon Musk did settle with the SEC by paying a $20 million fine and stepping down as Tesla's chairman for 3 years. But with the settlement, he was able to remain as Tesla's CEO, which a lot of people see as a positive. Now, Tesla, meanwhile, also had to pay a separate fee of, again, $20 million. And they also, this is kind of funny, so they also had to kind of develop a system to track Elon Musk. They want them to better track Elon Musk on social media and anything that he's kind of putting out there in the public. They want to make sure that they're tracking him and making sure that he doesn't go off the rails and do stuff like he has been doing. So kind of like a babysitting kind of system that they want Tesla to implement in terms of tracking Elon Musk. But back to this analyst that just shot the stock up. Now, what did he have to say? Well, he said a few different things, but here's just a couple things that I'm going to quote that he said. So he says, as much as you can't believe you are reading this, we can't believe we are writing this. He says, the most challenging part of being a short seller is to constantly check your thesis to make sure nothing has changed. You must let all predispositions and prejudices disappear and stay focused on only the facts. And then he went on to say, it is in that spirit and with a great deal of analysis and due diligence that we can say for the first time, Citron is long Tesla, as the Model 3 is a proven hit, and many of the Tesla warning signs have proven not to be significant. And then further down in this report from Citron, this chart pops up and it shows clearly that Tesla is just destroying the US electric vehicle market. They're completely dominating. And so right above that chart, he went on to say, if you would have shown us the below chart 5 years ago, there is no way we would have ever believed it. It looks like it is the competition that is taking the Ambien. And that, of course, is a joke referencing Elon Musk basically saying that he was taking Ambien to go to sleep at night. So anyway, this is really interesting news. And, I'm not a betting man, but if I was, well, I shouldn't say that. I am a little bit of a betting man, but if I was more of a betting man, I would assume that Tesla's probably going to have some decent earnings. I'm expecting earnings to be pretty good. I don't know if it'll happen. Don't quote me on that because, I never like to play earnings, and I'm not, even with everything that's going on with Tesla, I will not be buying Tesla stock. I'm just letting you guys know I do not own Tesla stock, and I will not be buying Tesla stock. But I am kind of thinking that earnings might be pretty good tomorrow. Which, by the way, Richard Pearson from Mox Reports, he also tweeted out that numbers will be a blowout. Now, I've never heard of this guy, but apparently he's a pretty famous short seller as well. So it's kind of crazy that these short sellers are just coming out and being bullish on Tesla just kind of out of nowhere. But anyway, if Tesla announces strong earnings, this is just another pro for me. I would be very happy because the more big companies that we can get out there with strong earnings, the bigger of the catalyst, earnings can be in terms of kind of rallying up the stock market again. Which, by the way, I've been buying a lot of shares of some of my favorite stocks during what I consider to be a dip. I consider this to be kind of a dip. I know a lot of people think that this is the start of a crash. I respect that opinion. It's very well warranted, I guess. A lot of people make some good arguments for it. But in my opinion, I think a lot of this is short-term noise. I think the midterms will come and go. I think regardless of who wins the midterms, regardless of who wins Congress, and it's kind of looking like it'll be split anyway. It's kind of looking like Democrats will take House, Republicans will take Senate. So either way, that would probably just cause some kind of gridlocking, and the market kind of likes that anyway. So either way, I think midterms will come and go, and I think that we will rally after the midterms. Historically, that's what we've done. So that's kind of what I'm expecting. The things that worry me a lot more are the rising interest rates and the trade tensions with China, the whole trade war with China. Those are the things that I'm more concerned about, but we'll talk a little bit more about like the trade war stuff when we talk about Caterpillar. But anyway, that's Tesla. Again, I do not own any shares of Tesla, but I do, however, own about 100 shares of NIO stock, and you can take that however you'd like. I know some people hate NIO. I know some people love NIO. I happen to be somewhat of a bull long term, but it is very speculative. That's honestly pretty much my speculative stock, like in my portfolio, my biggest speculative stock. Anyway, that's what I think about Tesla, and let's get going on the next stock. Okay, next up here, guys, is McDonald's. So McDonald's ticker symbol MCD. I'm not going to explain who they are. I'm sure you've eaten some McDonald's at some point in your life and instantly regretted it, but they climbed today over 6% to around $177 per share after reporting strong earnings that beat analyst expectations on both the top and bottom line, with revenue coming in at $5.37 billion, which was actually down about 7% year over year, but still beat expectations of only $5.32 billion. And then when looking at EPS, that came in at $2.10, beating expectations of $1.99. And when looking at US same-store sales, so same-store sales, by the way, that just means kind of like excluding new stores. It's just stores that have been there for a while so that you can have a more comparable comparison. But US same-store sales, they saw sales growth of 2.4%, which were in line with expectations. But then looking globally, kind of as a total, we saw a very strong growth of 4.2%, which beat expectations of only 3.6%. And a lot of this international growth is being attributed to them having renovations much further along in terms of their kind of timeline or roadmap, being more further along internationally as opposed to the US. Now, I live in the US. I haven't seen any of these renovations that we're going to talk about in a second. Haven't seen any of those in any McDonald's store, but to be honest, I don't really go to McDonald's much, but I haven't even heard of anything. And actually, my girlfriend goes to McDonald's a lot. So shout out to my girlfriend that's addicted to McDonald's. But she has not seen anything like that either. So it just looks like internationally, maybe they're a little more further ahead in terms of what their plans are for renovation and technology that we'll talk about in a second. But anyway, this marks the 13th consecutive quarter for McDonald's producing comparable sales growth. So it's kind of a big deal. 13 consecutive quarters, pretty good there. And so all in all, pretty strong performance. Now, the CEO of McDonald's, he was quoted saying, "We have made substantial progress modernizing restaurants around the world," again, just kind of what we talked about, enhancing hospitality and elevating the experience for the millions of customers we serve every day. And of course, he is talking about the billions and billions of dollars that they are spending on renovations across thousands and thousands and thousands of McDonald's restaurants. And they even have plans to open up thousands of restaurants as well, or at least 1,000, but I'm not exactly sure of what the number is. But they're doing thousands of renovations, and I think the timeline extends to about 2020 or 2021, kind of around there. Now, this is something that I talked about last year when I actually talked about McDonald's. The last time I talked about McDonald's was like a whole year ago, but their whole push forward, their whole initiative dubbed the experience of the future, where they're kind of integrating technology into their restaurants. Now, what does all of that technology entail? Part of it is mobile integration, so mobile smartphone integration, where you can actually order your food with your mobile smartphone. And they also have a partnership with Uber Eats so that they can get their food delivered to you, wherever you are. You don't actually have to drive anywhere to get your food. You can just order it with your phone, and you can even have it delivered if you choose to do that with Uber Eats. Now, on top of that, they're also building these kiosks, and so these are basically touchscreen kind of panels, and just like what a kiosk sounds like, it's a kiosk. I don't know how else to describe it. And you just walk up to the kiosk and you can just order your food, so you kind of don't really have to even deal with any actual person. But what really matters here is the mobile app, because they saw downloads double this quarter, so that's a very, very big deal. And they also introduced new packaging for their food that keeps the food warmer longer. And because of that, the CEO was basically saying that customer satisfaction is very high when looking at their partnership with Uber Eats, because customers are getting their food warm even when it's being delivered. Having said that, I do have some concerns for McDonald's. And one thing that I feel like a lot of people aren't really talking about is that most of their growth seems to be coming from their customers spending more money, which is good for customer loyalty, but they're not necessarily increasing in terms of foot traffic. And I can never seem to get concrete data on this, because every time I look at reports from analysts and things like that, it's almost like they just kind of brush it off, or they don't want to talk about it. I'm not sure if it's because they don't have concrete numbers on it, but I could not find numbers on it. So if you guys can find numbers, please let me know. But when looking at what the CEO said when commenting on this, and they always seem to have kind of a negative comment when they talk about this, but he said it's a market share fight on traffic. We don't see many people out there in the sector growing traffic. It's a scrap. It's a market share fight. So I'm not really sure how to take that, but it just kind of sounds like foot traffic isn't so great with them, and they're basically just fighting competition for what is available there, kind of in the fast food market. On top of that, when looking at revenue, it actually declined 11%, over 11% last quarter, and then this quarter got a little bit better, but still declined over 7% year over year. So they're basically on track to produce consecutive years of revenue decline, which isn't really that good. However, I do think that that's probably just short term, because they're renovating so many stores. I mean, think about it. If a store is renovating everything about it, it's going to affect sales, right? People might not go in there if it's under construction, or it just might kind of affect sales a little bit. But once they get all the construction done, all the renovating done, then they can kind of basically say, oh, this is like a grand opening or grand reopening, or they can say, newly renovated, we have new technology, and then that might just kind of flood in a lot of foot traffic from people that want to see what's going on and what kind of stuff they implemented, especially if they market this correctly. Because what are they calling this? The experience of the future. So if they market this correctly and put commercials out, the experience of the future, and like everybody gets all excited and they want to see what the heck is going on at McDonald's, that could definitely bring in some foot traffic as well. On top of that, McDonald's is a pretty good dividend stock. I know we don't normally talk about McDonald's, but they're a pretty good dividend stock. They just announced another increase of 15%, and they have a yield that is pretty close to 3%, so pretty good there, and a reasonable payout ratio of 56%, and over 42 years of consecutive dividend growth. However, their 5-year average growth rate is a bit low at only 6%, but still having a decent yield and having such a huge track record of increasing dividends, I think that kind of makes up for it. Plus, their last increase was just another 15%, which is pretty good. In any case, McDonald's is not a stock that I'm invested in. It's not really one that I'm very interested in. And I also kind of live more of a healthy lifestyle, so I don't eat at McDonald's. And if I don't really use the product, then a lot of times I'll kind of stay away from the stock. I mean, that's not always the case, but just sometimes. Anyway, I'm not investing in McDonald's, but I'd love to hear if any of you guys are invested in McDonald's or what you have to say, how you feel about the stock. I'd love to hear it. Let me know in the comment section down below. Okay, guys, last stock to talk about today. Thanks for hanging in there. Last one here is Caterpillar. Ticker symbol is CAT or CAT. And if you don't know what this company is, they're basically just a really big manufacturing company that builds equipment for things like construction and mining and several other industries. But they're pretty famous for like their big tractors and things like that. Now, they actually reported pretty good numbers here. Adjusted EPS was at $2.86, which did beat expectations of $2.85. Just barely beat it, but it did beat it. And revenue of $13.5 billion, which beat expectations of only $13.2 billion. And when looking at their numbers year over year, it gets even better. When looking at their EPS, they saw a massive 40% increase year over year. And when looking at the revenue, that was also an increase of 18% year over year. And then management noted this as being the quote, best third quarter profit per share in company history. So the stock just skyrocketed like Tesla and McDonald's, right? Wrong. It actually dropped by over 10. And at the time of this recording, they are down still over 7%. And they currently trade for around less than $120 per share, which is significantly lower than what they were at just not too long ago. By the way, they dropped over 20% in October alone, so a very significant drop. That's a fifth of their valuation just gone. So what exactly happened? Well, it mostly came down to rising costs from the trade war with China, resulting in lower guidance than expected. On top of that, their EPS did beat expectations, but it only beat expectations by 1 penny. So Wall Street, being the greedy pieces of sunshine that they are, they wanted to see more. But when looking at full year guidance, they reiterated their range of $11 to $12 per share, while Wall Street expected at least $11.65. So the lower end of that range actually fell short of analyst expectations for full year guidance. And that actually made this the first quarter since early 2016 that this company has not, quote unquote, beat and raised earnings. They beat earnings by a little bit, but they did not really raise guidance. And when looking at the reasons why, management said manufacturing costs were higher due to increased material and freight costs. Material costs were higher primarily due to increases in steel prices and tariffs. They also said that the impacts of third quarter tariffs came in at around $40 million, and they're guiding for a full year impact to be on the low end of their previously provided range of $100 to $200 million. Now, one thing that I forgot to write in my notes, but I think I remember reading that they were expecting costs for their customers to increase by around 1 to 4%. Now, if it's around 1%, that doesn't seem like much. If it gets up to like 4%, that could start to stack up. So I think that was another reason why the stock kind of sold off. I forgot to write it down in my notes, so I apologize for that. But anyway, I don't really follow Caterpillar closely. It's never really been a stock that I was interested in, but they are a pretty good dividend stock from what I've seen. So they have a very nice yield of 2.67%, a very low payout ratio of only 26%, and over 25 years of consecutive dividend growth. But their 5-year growth rate is pretty low at only 4.5%. Having said that, their earnings looks pretty good. And I was watching some like business news on my TV, and a lot of these business channels, they were kind of saying the same thing, that earnings wasn't that bad, that it's kind of a little bit of an overreaction. So maybe it's a little bit of an overreaction. If we start trade talks back up with China, get the whole kind of trade thing figured out, once we get past these midterms, if the market kind of starts to stabilize and starts to rally, this could potentially be a stock that performs pretty well, considering that it's also a pretty good dividend stock also. There's a few good reasons to own it. Now, they also have a forward PE of only 9, so they're not really that expensive. And at least one analyst from UBS seems to think the same thing as well. He reiterated a buy rating and a $185 price target after earnings. So he saw this earnings and everything, and he reiterated a buy rating and slapped on a $185 price target. And he basically said demand remains strong, and he pointed to the fact that CAT's backlog of orders have increased 12% year over year. So overall, this doesn't really seem like a company that's performing bad. I think there's just so much volatility in the market right now. If you don't come out swinging at earnings, I think you're probably going to get hammered. I mean, that's kind of what it's looking like. So, but anyway, the Caterpillar is not a stock that I'm invested in. If you are, please let me know in the comment section down below. But we've got some huge earnings coming up this week, guys, and I will definitely keep you posted. So make sure you subscribe. Make sure you hit the like button if you want to see updates on those stocks as well, because tomorrow there's AMD. There is also, what's tomorrow? There's also Microsoft. So two stocks that I own. I don't own that much of AMD, but I own a lot of Microsoft, and I've been buying a lot of Microsoft on its dips. So I freaking hope that they have good earnings. And in the long run, it's not a big deal. If they have bad earnings and they drop more, I'll just buy more. So it's actually, I guess it'll benefit me either way. But those are two big earnings to look out for. Also, Tesla that we talked about. Tesla's reporting tomorrow too. So I'll do a video kind of just rounding up all of those different stocks for you guys. And then I think the day after, I think is Amazon and Google, and I think Intel also. So there's some huge earnings coming up. I'll do a video for you guys on that one as well. And then once those big kind of earnings are done with, then we'll start getting back to the regular content that I kind of do on this channel all the time. But anyway, I'm trying to do more videos for you guys. I hope you appreciate it. I hope you've been enjoying the channel so far. If you have, let me know by hitting the like button, and make sure to leave a comment down below. Let me know what you think about all of this stuff and all the volatility in the market and how you feel about everything. I'd love to read it. So anyway, thank you so much for watching, and I will catch you guys in the next video. Have a wonderful, beautiful day, and take care, and be safe out there in the market. And I'll see you guys later. Bye-bye. When looking at what they're doing, so they have mobile integration, so mobile smartphone, I can't even speak today, mobile smartphone integration, so that you can order your phone, oh my God, order your phone.